What's up, everybody? Welcome aboard. It is Trading Live with Bubba here on Thursday. And of course, there's not a real lot going on. It is a very quiet day. Of course, we do have triple witching expiration tomorrow. I think the biggest concern here is the true lack of overall liquidity in the market right now. And whether it's, for whatever reason that we're experiencing it, we don't have a lot of market participants, which makes it challenging. But if we take a look at our active stuff that we might look at trading, we could certainly get a potential trade in crude here. Need a little bit more of a spike up, but that's certainly a possibility. But you can't see a real lot of action. There was a nice trade in the NASDAQ earlier. So again, if you didn't make it, it doesn't matter. Remember, it's not the trades that you may miss. We have to be worried about the trades that we're making. Okay. And again, just what I'm trying to point out to you is to recognize the potential opportunities. So when you see them later, you may be able to make that trade. And that's really what we're looking for. Again, obviously in our short period of time, there's not always a lot of action, a lot of things that we can do. But as I said, I am concerned about the liquidity right now, and I am concerned about the lack of market participants right now. But as we take a look, and we'll go to our main board right now because there's really not much going on, as has been the case, unfortunately. But as we look at the futures real quick, S&P futures are still extremely overbought. They're going to pull back. And again, if you've sold spreads, as we were recommended, they've cashed almost every single day because we're not getting the big explosion up. We're getting the grind higher. Okay. The same goes for the NASDAQ. Okay. You get these. You're not getting any movement, so they're staying overbought, but they're not blowing through, which leaves your spreads into cash. That's why we like trading these 4 to 5 hour trades that don't create a lot of problem, a lot of issue for us. And I think it's something that you have to remember. So as we look at our actual stocks that we watch all the time, Apple, again, got very overbought as we talked about on Tuesday. And sure enough, here it's coming back. Now, again, this is up to you. You got triple witching tomorrow. It doesn't mean a lot. And I will say this to you, that the biggest action in triple witching will be tomorrow late in the day. So certainly you could sell some of these and get out before the triple witching, or you can go through it. Again, you remember you're limiting the amount of risk you're taking. So you certainly could go through it, but certainly now, obviously it's too late for Apple right now. I would just watch Apple. Amazon, is getting closer, but really just stuck in this range. Notice the lines were already there. I didn't draw them in now. They were already there. And you can see that we're not seeing an overall great amount of action and movement. So I think that if you remember those things and you look at those things, you will find out that being patient and waiting for your opportunity will always be better for you. Coin, again, right at the mean, not much to do. We didn't have much to do on Tuesday either. We were waiting for it to break. And of course, it's right at a key area right around 240. So we'd really like to see it either rally to 260 so we can sell it, or sell off to 220 so we can buy it. Crowd, again, it stays. This is one of the things you look at now. So now we had an overbought condition, and which we would have been sellers. And of course, if you'd have been selling spreads here, they keep cashing, okay? Because again, you're not getting action. You're just getting sidewards. You're getting consolidation, which is perfect action for spreads that you use, is a consolidating market. And let's just go back and see if there's anything going on so I don't miss a potential trade. So crude never did become a trade because it had too much blowback back down to here. And there is no action anywhere else right now. So, okay, that's fine. So we go back and look at what we're doing. Okay. Meta, again, as we said the other day, it got to that almost an overbought condition, coming right back. And here you are in a new range of consolidation. And you can figure to sell the bottom or sell the top, or, sell call spreads at the top or put spreads at the bottom of this range right now, because that's what we're looking for. Because again, until the pattern changes, this is the pattern we're going to expect. We don't predict the patterns. We trade the patterns as we have them. Okay. Google, a little bit of a bounce, but there's virtually nothing to do here. Okay. Again, certainly you could look at the upper end, 180-ish. to sell it, 170-ish to buy it, which would be selling call spreads or selling put spreads. IWM, as we said the other day, now this was a perfect trade. If you'd have sold put spreads every day, you'd get paid off. Okay, we talked about it. We understand that it was very oversold. And again, it didn't go straight up, but it didn't go down. Remember, when you're dealing with premium and you're dealing with spreads, they don't have to go in your direction. You just don't want them to go too far against the direction that you're playing. Okay, because we have enough room to overcome that. So this was a perfect trade and has been perfect every day. And again, it may not be a lot, but you think about it, if you're trading one contract and picking up $35 to $40 a day on a couple of different things, that's $500 a week, okay, for doing nothing, just for being able to read the chart and take a look at the action, okay? Moderna got very oversold. We were waiting for this one, and certainly if you'd have sold put spreads yesterday or even this morning, it's a good trade. It may not win, but it's the right trade, okay? Again, remember, it's not a question of whether you win or you lose on any individual trade. It is a question of you're using the probability to make the correct trade on a regular basis. Because there's an old saying, amateur traders want to be right, professionals want to make money. And you have to decide which one that you want to be. Microsoft, as we talked about Tuesday, got very overbought, was certainly a sell of call spreads. And here you go. It's breaking down. Now, again, it's not going down breaking down is not the right word. It's going down, okay? But again, remember, if you'd have sold, as we talked about, the 450, 455 or something around there, you got a big spread, you got a big lead right now, and you could probably get off for a profit if you wanted. I mean, there's a lot of things that you could do, but these are the things that we're watching, okay? Because again, this is a high probability trade that suggests there's a greater probability for a pullback. NVIDIA continues to rally. Once again, we're now in that overbought condition. Certainly, I would be looking at spreads. Now, I have stayed away from NVIDIA recently. I do own it, but I've stayed away from it from a selling point because I've had a lot of bad luck with it. So why should I continue to trade something that beats me up a little bit? But certainly, I may start to look to participate again here. The Qs, again, very overbought. And again, had you sold them every day, okay, they've never gotten away from me. And again, that's again, you got to remember that they're not getting away from you, which means you're getting paid. So let's see what's going on here. Not very much. Okay, not a lot of action, not a lot for us to really do. Where we at here? Now there's not going to be any trades on this bar either. Again, when there's nothing to do, you have to be willing to say there's nothing to do. And I'm talking about from a short-term day trading perspective. It is different when we're looking at these type of charts. Square, as we said the other day, again, not to be redundant, but we thought that we would want to sell put spreads down here at the lower level, and there it is. Okay, and you're getting the bounce. And again, like I said, it doesn't have to make a big bounce in your favor or a big sell-off in your favor, because you're not going to make. If you sell call spreads and you get a 10% drop, you're only going to make the same amount if you get no drop. Okay. So again, you're not looking, when you're making these types of trades, you're looking to grind out. You're looking to create some of your own yield. Okay. And that's something you want to make sure that you're participating. Hold on one second. So again, remember, that's what you're looking for. You're looking for the best opportunity. Same thing goes for the spiders. Okay? They haven't gone up far enough to hurt you. All they're doing is going up a little bit at a time or holding. So again, keep that in mind. Tesla remains in Never Never Land right now. Not much to do. Okay. And Zoom got hammered. And as we said, maybe, and now is probably a time to take a look at it. It looks like it's turning around, and maybe sell some put spreads here. Again, I can't make recommendations specifically, but I can tell you the ideas and things that I'm doing. Okay, and those are things that I'm doing. I did sell spreads in Zoom, and I do have I'm already short the SPY and the Q. Okay, and I'm short put spreads and IWM. So everything I've told you about the trades that we're looking at, I've done them already, because of course I do them as soon as I see them. It'd be nice if we could do them together, but unfortunately the markets don't always work that way. Okay. So is there going to be anything coming up here? It doesn't really look like it, but you never know. I mean, it's certainly the euro currency is going straight down. It doesn't appear to be creating a potential trade, but you never know. Okay. I think that, again, I don't think it'll get there. That would be my guess, but we'll watch it and we'll see, because again, if it does create a trade, and what it would take now, if you understand the type of trade we're trying to make, we're trying to play on the emotions of others. Okay. That's what this trade is all about. Okay. And there's really no emotion in the market right now. You don't see the big tanks or the big sell-offs. Sometimes the volume looks okay, but the numbers are still way off. But again, I'll make that trade. If it gets there, I would have made this trade if we had a legitimate trade. Okay. It just wasn't, I wasn't going to give up the blowback here. Okay. So that's something to look at. Gold looks like it might be rolling over a little bit, but again, this did not give me a blow off formation. It just kind of ground its way up. So again, there's not really much emotion in there. And that's what I'm looking to see, those that are panicking or trading under an emotional state. Okay. Because we're trying to take advantage of others. Okay. We're trying to take advantage of the emotions of others. And that's why in this business, you have to be much more stable and not be emotional about what's going on. Okay. So crude, again, very tenuous. And it's fortunately it's blowing back, because I don't like to, especially when I'm teaching, I don't like to take marginal trades. Okay. If we were really busy, I would be much more concerned. I'd be looking much closer at this crude trade. But because we have a lack of activity, why should I get involved? Again, remember, you have to remember that the markets are open 241 days a year. You don't have to be involved on a regular basis, okay, if there's not a trade available to you. Okay, that's the key to remember. If the trade is not available, if you don't see it clearly that you have a good solid trade, then there's no reason to play. Now, when you get busier and there's more trades being created and there's more activity being created, all of a sudden, now you got something more to do. Okay. So, I mean, certainly if you sold the gold right here, is it a bad trade? No, it's not a bad trade. It's just a trade that, if you make it, you're not really making it for the absolute right reason based on what we'd be looking for. Okay. And I think that's something that you have to, keep in mind. I'm just cleaning up a couple of my own trades that are open, because, I do trade all day, every day. So at the end of the day, again, we're getting this straight down in the euro currency, but I'm not getting any panic volume, which means that more than likely the selling will continue. Okay. And that is something that we have to remember. Okay. Is where is the opportunity? Where is the market leading us? And again, we're not getting led much of anything right now. So it doesn't make a lot of sense for us to be overly involved in this market, which we're not. We're waiting for opportunity. I mean, it would certainly be nice to see this volume explode in the euro currency up to here. Then we'd have a trade. Okay. Then we'd have an opportunity. But right now, the opportunities still are lacking in existence. Okay. And that's what we want to be worried about. Okay. We want to make sure that the opportunities are good and solid, because even when they're perfect, they're still not guaranteed to be a win. And that's what you got to always keep in mind and remember. Even when the perfect trade shows up, it doesn't guarantee that it's going to be a winning trade. Okay. When the setup's perfect, but again, the probabilities over time will tell you that the setups, if you continue to make the same trades over the same setups, you will be in good shape. Okay. And that is something that is important to understand. Okay. Now this is getting close. Okay. This has a shot to get there. Okay. Gold's got a shot to potentially get there as a buy. Okay. And we don't know, and we're not going to predict it. We're going to wait and let the market trade. Okay. And as the market trades, if it gives us opportunity, great. And if it doesn't, well, there's always the next trade or the next block of time. Okay. Again, this is what you always want to remember, is that these markets are always here. Okay. And if you put yourself in jeopardy, then you're creating a problem for yourself. Okay. And that's what we're trying to stay away from, is creating our own problems. Okay. Because when we create our own problems, then we change our mental side of the trade. We change everything that we do, because now we're chasing money. Okay. So the euro currency looks like it's going to get there. Okay. Now I will tell you that this is not the greatest. So I wouldn't, now it's getting there. Now it's getting to be a very solid trade. Oops, what happened? There we go. Okay. So now this is the biggest volume bar of the day. You can see that it has been a little bit of a panic taking it down. Okay, great. So let's go and go to our 1 minute and look where we can get an opportunity to enter. Our stop's going to be 107.41. Okay, 107.41. And let's see if we can get a trade here, which would be fine and good. I'd be happy to take it if it gives it to me. And it looks like crude might be giving us a potential buy signal coming in. No, not yet. It's really not that much volume. It just looks busier than it is. Okay. So in the meantime, the euro currency looks like it's going to be a buy with a 107.41 stop. Okay, if you want to trade it, go for it. It's a trade, 107.41 stop. Oh shit! It's bought the wrong goddamn thing. Okay, 107.41. Okay, and okay. So now we'll let it trade, see what goes on. You got a little bit of a profit already. Now there's nothing we can do with it yet. The profit is not big enough to make any trade with it or make any action with it. But again, it is something that we get to look at, okay, and understand where we are in the market. Okay. So now we expect a much quicker return. If this is the right trade, it should make a quicker return. So because we're running short on time, okay, and because I don't want anybody, if you're not sure what you should be doing, I'm going to tell you to go ahead and put your stop at break even now. If it runs, it runs. If it takes us out, and your break even is enough to cover your commission, okay? So in my case, it's a half a tick, okay, because I'm trading the big one, not the micro. But I cannot do any worse than pay my commissions and maybe get a cup of coffee, okay, and that's all, okay. But again, I'm not worried about that, because again, it's working, it's running, and if it works in my favor, great. And if it happens to come back down, I got a little bit of money, okay. But in the meantime, now it's up much more now, okay. So it is going in our favor, and I'm already in place, so I don't have to focus on it. I don't have to watch it. I can just let it trade, and I can look for other potential opportunities if there is any, which doesn't really appear like there is much. But again, you never know. We never know. And again, there's not really enough here to get overly excited about. So we sit and we watch. Hold on one second. Okay. So you got a nice little profit here. If you want to, again, this is up to you. This is how you feel the trade out. I'm going to let mine work. I'm not going to move my stop yet. But if you want to lock in a couple of ticks and continue to let it run, go for it. That's what you do. Okay, you make decisions as you're trading. In the meantime, there isn't much else to do, and we are running out a little bit of time. Now, there is a potential here in crude oil if you want to take it. Now, I'm not going to take it, and I'm not going to recommend it to you today because A, I'm not going to be here to help you manage it, and B, I don't feel, again, I'm very passive here in what's going on because I don't see a lot of dramatic activity that really wants me to get involved. So I think it's easier sometimes just to stay on the side, okay, than to get too active. Okay. So in the meantime, have a great weekend, everybody. We'll see you back here on Tuesday. Thanks so much. We'll see you later.
Thanks for watching. Please be sure to take some time to read the disclaimer. Thank you.